Welcome back. Now we have an exciting panel discussion that is starting shortly, and we have got experts within the topic of blockchain. So I will hand over to Anca, Bogdana, Rusu. He's an ex-core member of GIFT and is responsible for partnerships, policy, and advocacy at cLabs. And she will be moderating this panel discussion on blockchain and the disruption of traditional banking. Anca, I will hand over to you now.
Thank you so much for that. And welcome, everyone. Thanks for joining us for this panel, which I hope will be very interesting and comes really well after the last presentation that we've seen. As it was mentioned, I'm part of the executive committee at Impact FinTech, which is an ecosystem of leaders in the FinTech ecosystem. And if you want to learn more about us, go to giftforum.org. But to the topic at hand, I think I'd love for us to start by introducing the speakers that we have here today. Maybe going alphabetically, I'll ask Bowie to start. And please take 3 to 4 minutes, introduce yourself and your company so that we have plenty of time for discussion afterwards.
Sure. Thank you, Anca, and hello, everyone. I am Bowie, based in Hong Kong, and it's a pleasure being invited to join this interesting panel to talk about blockchain technology. So I am a woman with many faces. So one of them, I run MHO, which is a angel investment firm. I do direct investment into startup technology companies. On the other hand, indirectly, I also invested a venture capital fund called True Global Ventures. So True Global Venture is more like focus on blockchain, Series A to Series B companies. There are 4 specific verticals that we're interested in. One is in financial services. Second is infrastructure. Third is gaming/entertainment. And fourth but not least is gaming/entertainment, AI and data analytics, sorry. So these 4 verticals, if any companies hit either vertical, will be interested in. So that's the investment side. I also run Mayspire, which is a venture development and education group. So I run a consultancy arm helping companies in terms of business development and market access. And Mayspire, on the other hand, I focus on education. I do believe pay it forward, and no matter what you do, either you want to make a career move, you want to get a promotion, or you want to start investing, the first thing you got to do is to get yourself educated. So which is why that pushed me to pay it forward and do a lot of educational conferences and educational events, mostly focus on technology. Like blockchain, cryptocurrency, or like non-fungible token, or even property technology. So I'm very excited to be here. I'm also a very active member of GIFT, which is a global impact fintech forum. Same as Anca, we are both a very active member for this forum. This is a nonprofit association with lots of think tank, ecosystem leader from government around the world, regulators, industry, banks, fintech, and blockchain companies. So if you would like to find out more information, I will leave the link into the chat, and we would like to keep in touch with everybody. And thank you for having me here.
Thank you so much, Bowie, for that. Lorien?
Thanks, Anca. I've just noticed, sorry, that there was an echo. Yes, I'm the CEO and co-founder of a company called Sempi, and if you were in the last session, you heard a bit about it. I've also founded a company a few years ago called Bankymoon, which was a blockchain advisory company. So I've been, for many years, about 10 in fact, pursuing this idea of Bitcoin as a cash system. The title of the white paper, the original white paper for Bitcoin, was a peer-to-peer cash system, and so I've been very interested in the financial aspect of Bitcoin. But specifically trying to make it possible for people to use it as a payment system. I've always been very interested in the fact that the original Bitcoin idea was to have a low fee easy to use digital payment technology that people could use. So the financial inclusivity aspect has always been interesting to me. I think what we're doing right now with Senpi is showing the world that it's not about investments or about all these pie in the sky ideas about changing every single aspect of our lives with blockchain. The payments use case for me is sufficient to not just disrupt payments, but to make the world a better place. And that's specifically around eliminating fraud and making payments cheap. Those are two ideals that I hold dearly, and I'm pleased to say that Senpi is in fact achieving those goals.
Thank you for that, Lorien. Mike, welcome, and thank you for joining us at an hour that I know is not very friendly.
Yeah, you can see I'm half asleep. So hello from the mountains in Tasmania. I'm sitting in a cottage. We're mountain biking in the Tasmanian mountains. So apologies for looking so asleep, but it's because I am half asleep. So I'm the co-founder and CEO of NONA Digital. We build software for fintech and blockchain companies. So we work with the Tezos Foundation, Algorand. We do a lot of work for Civic. We work with the co-founder of Ethereum. So we're a services company, not a product company, but we get to see a lot of products come through the space. So I think we've got a good handle on, I guess, the observations point of view of what works and what doesn't, and why it works and why it doesn't work. And then personally, I've been involved in the space since 2011. So I've been watching this unfold and mature, and it's been incredible. So that's me.
Thank you, Mike. Last but not least, Mohammed.
Thank you, Anca. So it's quite exciting to be part of such a panel. A lot of co-founders are here. Unfortunately, I have a very boring personality. I'm a banker, and I've been like this for the last 18 years or so. So it's good to have you guys around. As an introduction, I work for Standard Chartered. Standard Chartered is my first love. I've been with this bank for the last 18 years. It's a global bank, doesn't need introduction. I think we are in more than 50 plus markets. From a pure digital perspective, I think this is one bank who is super excited to use new technologies. I think we have launched a digital bank in Hong Kong. You guys must be aware of. It's called MOX. We're launching one in Singapore. We have launched 9 digital banks in Africa. So I have launched myself I'm based out of Tanzania, by the way. So I have launched myself a digital bank 2 years back. It is not using the state-of-art technology which you guys are talking, which is blockchain and next level. I think it is using some really basic technology, but I think what I can share with you guys, the impact is huge. So all the stuff you guys talk about, that how blockchain can disrupt, I think some part of it we can already see. We launched the bank 2 years back, and just imagine we onboarded 100,000 clients in just 2 years' time. And in Tanzania, Standard Chartered was there, has been there for more than 100 years. We never could acquire such clients in 100 years' time. So 2 years really disrupted, and things have gone to another level. So I think I'm looking forward to this session. Hear a lot of exciting views, and let's see where it takes us. Thank you.
Thank you so much for that, and thank you for joining us. I would love for us to jump straight in, and picking it up from where Mohammed left it. What about usability, right? You talked about how digital banking and mobile banking are easy to use by consumer. They're secure. They're now readily available in a lot of countries. How can the blockchain and crypto world really disrupt traditional banking if it requires people to remember long cryptographic addresses? And I mean, even as mobile money practitioners know, even sometimes a 4-digit PIN can be misplaced and hard to remember. So I'd love to hear maybe Mohammed and Mike being on the two ends of one, how digital banking has done this well, and how products being built on different blockchains can help move the conversation along for usability.
Sure, happy to share some some opinions or observations. So I think usability is a massive factor. We all know that. My mom and dad still can't even explain to people what I do at all for a living, let alone use any kind of blockchain or crypto-based app. Having said that, I don't think we're building technology for current users when we talk about this. I think we're building for the next generation. And I think the next generation doesn't have a problem with this at all. I was in Sydney last week visiting my cousin, and his 12-year-old son is 100% comfortable using and transacting and researching cryptocurrencies with no explanation needed. To get a little bit more specific, when you say you have to remember these very large random strings of numbers, you actually don't. There are ways to resolve to those large strings of numbers with much simpler things that make it much easier to do. And a good example of that is a new startup that Ricardo Spadney, who was the lead contributor for Monero, has just launched. So it's y.at. And he's using emojis to resolve to addresses. So you can literally have smile, banana, smile, right? Resolving back to your crypto address, or 3 hearts, or whatever you want. Doesn't really matter what it is. The point is that it's kind of like a DNS, like a domain name server lookup. It's like that stuff is not that difficult to solve. I don't think those are the usability issues. So I guess in summary, what I'm saying is, number one, we are working very fast and well and effectively on trying to simplify things like having to remember very long strings of digits. But I don't actually think that that's what matters. I think what matters is that the younger generation coming through, they don't need to be educated on this stuff. It's already being educated. And I have a 5-year-old daughter, and I often say to people, I don't believe she will ever know what the term 5 to 7 working days means. I don't think she'll ever walk into a branch. I don't think she'll ever have a bank card. And I think it'll just come through the sort of this newer generation. That's my view on it. I'd love to hear more comments from the other side on that.
Thanks. I think let me chip in here. So I think, Mike, what you said, I don't disagree even a cent. I think none of us will disagree. Anyone who can see kids the way they operate today, and no doubt it's the next generation kids, and they are much more tech savvy than us. So there is no doubt about that. I think what I would like to drag this conversation is, or rather give a thought process to everybody. How can we really take these currencies, whatever the new technologies we are bringing in, and make it so user friendly for our layman generation that they can really understand? Because see, I'll give you two perspectives, and just to give you a background, I have worked 15 years in Dubai. I've been here in Tanzania 3 years. So it's like I can compare apple and orange very differently. You know, the Dubai market, they're all tech savvy. They have smartphones in their hands and they move around. In Africa, you come around, you have got these small phones they use for your wallets and USSD payments. So it's poles apart, and Africa has got 1.2 billion of population, which is close to, again, 7.6 billion of the world. So it's a big size over here. What I think we need to, there's no disconnect that future is technology. Spend time how to get it exposed to anybody and everybody around us, and make it easy friendly. Like Mike, what you just said, using apples and bananas to solve it, or emojis. I think if you go around and ask 10 people around that whether they know how to use it, trust me, they don't. Even as a banker, I might struggle. So I think we need to take it to that level. The big play over here is regulators. I think they really need to understand and support the local ones. I'll give you a simple example very recently, and without quoting any regulator name. In one of the Africa markets, we went to the regulators to discuss cloud infrastructure. You won't believe it, they didn't approve. They said, what? Clouds? We are not supportive. We want you to have local data centers. God bless us, we are going towards another kind of technology, and here regulators doesn't even support cloud. So I think we need to cross that mile around us. We can make it happen. I think it's all how user-friendly can we make for our clients to use. I must share with you guys the way wallets have been used here, mobile wallets in Africa. It is, I think, Anca, you mentioned 4 digits PIN. at times people forget. But the use of wallets is so heavy over here. You go to Hong Kong, Singapore, they don't even know how. Trying to learn from here because that technology has taken another leap. So Africa, typically it's called that they live by generations. So they didn't go towards the internet, they used wallets, and they're going to another level of e-wallet systems that is being used. So I think it's all how we customize it. And I think the future is around us, how best we can shape it. Thank you.
Thank you for that, Mohammed, and thank you, Mike.
I think our colleague is having difficulty.
Yeah, I believe we lost the connection with Anca. But I think we've been kind of brief on all these questions. While we're waiting for her, why don't we start with the first question? This is the topic about the blockchain and the disruption in the banking industry. So obviously, the regulation is is one of the concern. So from the financial payment wise and the financial sector is definitely highly regulated. And while cryptocurrency and asset are not. So this is a fair fight. I personally don't think so. But then, how do you see the financial sector responding? Why don't we start with Lorien?
Well, the first thing is to make sure that. Sorry, could you just mute there, Larry? Okay. Yeah, so the first thing is to make sure that whatever guidelines or regulatory requirements there are around payments are complied with, and those are changing. New ones are coming on board. The Financial Action Task Force has been making these recommendations around things like travel rules. So if we want to make sure that as crypto companies we are allowed to exist and to allowed to provide services, then we're going to have to make sure that whatever rules that exist within the payment sector and the financial sector, that our businesses comply with those rules. I mean, there is a myth that this is all new and the regulators don't know how to deal with it, and now we're going to have to now wait for them to come up with new regulations, but that's in fact false. There have been they haven't been called cryptocurrencies, but digital currencies for many years. Bitcoin isn't the first one. The only thing that made Bitcoin special really was the economic model within the mining network. So that's really all that's different. But we've had digital payments and companies providing digital payments for many years. So it's not a mystery to see what regulators are going to start obligating companies to enforce. And I mentioned some of those, being able to link identity to transactions on the blockchain. That's very important. In Bitcoin, transactions are pseudonymous. That doesn't mean they're anonymous. It just means that the identity of the owners of those transactions aren't, it's not baked into the blockchain. And that's why companies like St. B and other payment companies, we need to make sure that we know who our customers are and have the ability to link transactions to our customers, so that when an audit does happen, or any of the other things like the money laundering checks and that sort of thing, that we can supply that identity to the regulators. There are companies out there who are trying to do away with that sort of thing and trying to say that, well, this is all about being outside of the regulatory environment. But again, those are going to be the companies that end up failing miserably, and there's nothing that's unstoppable in the world. Yes, of course, there might be blockchains that operate outside of government control, but they will never ever reach a scale that becomes significant. Think of it in terms of, you get these guys who have their ham radios, those little radios that they can broadcast for a few square kilometers. They can exist, but they can't create a station that uses a spectrum that's regulated spectrum. So this is going to be the same for blockchain companies and crypto companies and payment companies. All the rules that exist for payment companies must be complied with. And it's not about waiting for new rules and regulations. It's just about looking at your company as a Bitcoin or crypto payment provider, just like any other financial services provider. So that means licenses. It means all the right thing, all the same things that a normal a financial services provider would have to provide. And that also means having key individuals, those that have been gone through the training around the customers, all that sort of stuff. And that's what we're doing here at Senpi, and why we're having so much success in South Africa.
Great. Anca, while you were gone a little bit, I just kick off the question without waiting for you. I hope you're okay. So we're on question 1, and Lauren just gave us a really good answer. So back to you, Anca.
Yes, my apologies. We sort of had a blink in electricity, but of course that meant the router went offline, and then it needed a few moments to reroute. In case you're wondering, it happens in Romania as well. But no, I mean, I think I love to hear all of you talking about how your views on sort of regulation and your approach that. I had an inkling of what Lorien would say from his previous session, but Bowie and also Mike, you're building products on the blockchain, and a lot of these have to figure out, how do they comply with existing regulation in different jurisdiction. What's the journey for that?
Yeah, happy to speak to that. And I think just to sort of, again, just to reiterate, we're not a product company. So unlike Lorien, we don't have to know this stuff ourselves, but our clients do. And just picking up on what Lorien was saying, it's interesting because we see a fair number of founders wanting to build things with absolutely no cognizance at all of the regulatory compliance landscape. And we have to sort of tell them about it. And those ones won't work. Those founders, those startups that are not taking this into consideration are very, very unlikely to work. On the contrary, what we're seeing with our clients that are doing very well and that do have a shot at actually building out a proper scalable business, it's all about compliance. It's all about partnering with the right people. It's getting the banks on board. It's getting the banking licenses with the partners to get these things across wherever they have to get them onto. The other thing that I'll just end this comment with is the difference between going to, I don't know, Consensus New York in 2018 and having, lines of Lambos outside a hotel in New York with 8,000 people attending and maybe 3 suits in the entire auditorium versus being in Australia Blockchain Week last week, and pretty much everybody there was a lawyer, an accountant, or a banker in a suit, speaking about compliance, speaking about regulation, speaking about the banking industry. The entire narrative has changed completely, which is an anecdotal thing, but for me, it's a massive indicator of the maturity of the space.
Thank you. Bowie?
Yeah, so for me, it's definitely not a fair fight. The banks are used to being heavily regulated, as they are like principal pipelines of money, which usually is a country legal tender issued by countries per government or central bank or authorized money chest banks. So since they perform a systematically important role in capital markets, financial services like banking, investment, and payments, they are cautious about touching in cryptos. And currently, they mostly seem to view cryptos as investment asset for their investor clients. And very few banks have touched upon stable coins for their own purposes, like JPM coin. Banks will participate happily when central banks start issuing CBDC for sure.
Thank you. So I see we have a couple of questions from the audience, and one that's coming in is asking, how can countries that prohibit transactions on cryptocurrencies in the banking sector benefit from this? And I assume this is the rise of blockchain technology. I don't know if we have anyone. I guess India would be one of them. Turkey more recently in terms of the ban on payments. Nigeria has a few things going on. I don't know if any of you would be interested in trying to answer the question.
I'm happy to answer. If your country has a rule around crypto trading or using Bitcoin crypto as a payment system, if they disallow it or ban it, then there's nothing you can do. It's just a fact of life. We're going to see probably a lot more of this as regulators start learning more about these cryptos. And I think that ultimately most cryptos will die because they can't show regulatory compliance. So this is just the nature of this whole thing, that ultimately the only way that it will survive, blockchain will survive, if it has all the ingredients that makes it regulatory compliant and, of course, controllable. And just based on those facts and factors, you can already start eliminating most of the blockchains out there. So it sounds boring to keep harping on about this, but regulatory compliance is going to be the name of the game. And if companies can't show that they can track and trace their customers, that they can provide all sorts of reporting to the regulators, and that they can control the funds, the flow of funds, and where they're going and where they're coming from, then the regulators are going to disallow it. Now, I don't think it's all bad. I think that ultimately regulators will find out that something like Bitcoin, original protocol Bitcoin, does have all those ingredients. It's just that we have to now spend a lot more time getting rid of the last 10 years of false narratives around what Bitcoin should be and crypto should be. Look, I keep saying crypto, but I ultimately even believe that there won't be multiple blockchains. I think that there will only be one, just in the same way that we have one internet. We will only have a single blockchain that will be multi-purpose. And interestingly enough, the original Bitcoin protocol can do all the things that all these blockchains are trying to do already. And that's why I'm so optimistic that ultimately the world will settle on a single compliant blockchain, and that will be the original Bitcoin protocol.
Thank you, Lorien. I don't think if you and I agree that on the whether there's going to be one or multiple, but I do definitely agree, and I'm putting here my previous World Bank hat, that education is fundamental in sort of dispelling a lot of the myths, a lot of just the very misleading headlines that you'd read around the blockchain and crypto world when talking to regulators, and being able to have them see that there's just so much potential even for them to improve AML compliance by if payments are being delivered in this way. Now, speaking of some of the big topics that are hot in terms of both blockchain and regulation right now, decentralized finance. It's one of the most powerful trends in the industry in the past couple of years. It's one where a lot of proposals for regulations have come up recently in Europe, in the US, and other parts of the world as well. FATF has also put out a proposal. Where do you see DeFi going? How do you even, if we're talking about the disruption of traditional finance, how can banking compete with decentralized finance? Is that something that banks are even aware of, looking to do? I don't know who to throw this to. Definitely, Muhammad. I'd love to hear your thoughts on it, and then maybe we can go around the virtual table.
So I'll give you a straight answer. I think banking right now, they are not looking at that front, or they are not looking it as a competition. And I'm saying on behalf of most of the banks. See, I think one thing we should all, I think I'll try to put it on the table. See, there are few areas of banking that have been very sophisticated. That to disrupt right now through the decentralized finance or other new tech initiative that is coming, I think it may take a while. The area where banking is getting really disrupted is the retail side. I think that is going away, whether you look at it from payments perspective, whether you look at it the way people behavior, the way they transact. I think that is going away completely. Slightly, it's going into the SME space as well, where the small companies, yes, whatever tech tools they can use, and hopefully blockchain can really help us to reach that far. I think that is where, yes, banking is feeling a little heat or a pain, and we are looking at different innovative solutions to handle it. When it comes to the corporate side financing, which is much more sophisticated, I think it will take a while to reach that space and where banking really feel ahead. So right now, I think my view would be banking, they have got many other problems to solve than to really get bogged down by decentralized finance. It's not hitting that far. Thanks.
Anyone else wants to jump in with thoughts on decentralized finance and where it's going?
I'm happy to give some thoughts. I'm probably not qualified to give these thoughts, but I'm going to give them anyway. I fully agree with Mohammed. I don't think it's big enough yet to pose a threat to the banking industry. But I think, we've been speaking about education, and I mean, decentralized finance is still incredibly difficult to understand. If you ask the average person what decentralized finance is, they may or may not be able to explain it. If you ask them what impermanent loss is, I probably reckon they won't be able to explain it. And even if they do explain it, I don't think anyone understands what impermanent loss really is, because it seems to be this kind of this dark art. The other thing is that where I think banking or financial institutions might get involved in DeFi is twofold. One, providing liquidity for the lending protocols. Some of the bigger lending protocols like Aave or what have you, they're starting to do decent volumes. I mean, not in comparison to the traditional financial industries, but they're getting bigger and bigger and bigger, and they still need to be legitimized. And I think there's a potential that banks might get involved in certain way to legitimize these protocols and provide liquidity. If I'm a banker sitting and managing risk, I think DeFi is still way too risky. Even if you listen to the top people running the biggest protocols on DeFi, they're still absolutely acknowledging that it is not by any means secure, or maybe secure is the wrong word, it's stable. And I'll give an example of that. There's a protocol, just one that comes to mind. It's called Swerve. And Swerve was a kind of a take on another protocol called Curve. And the reason why it's attractive is because your double or triple-sided liquidity that you're providing is stable coins, which means impermanent loss is not really a thing. So you would think it's great, but the smart contract that is running all of this hasn't even been audited. Like, that smart contract is not, it's not audited. It's not, no one knows who's maintaining it. So sure, there's very low risk of fraud or what have you, but there's a very real risk that the smart contract is actually incomplete, or there's an error and then your funds are gone. So I think, I don't know this, but my sense is that it's just not mature and evolved enough for the banks to be taking it very seriously. And I think Mohammed was kind of saying that it's just not on the radar enough yet. Where it'll be in 5-6 years as liquidity is pouring into the space, I don't know. I mean, I would just have to guess that it'll be a hell of a lot more evolved, and the technical elements of it will be better, more scalable and more robust. And then the banks will probably start taking notice as the market cap climbs from 2 trillion to 5 trillion to 10 trillion.
Thank you, Mike, for that. I'm gonna just swerve a little out of the scope and mention another fascinating trend that's coming out of the blockchain world, which is not necessarily related to banking, which is NFTs, non-fungible tokens, right? It's been making news in mainstream media. It's either hailed as the destroyer of the environment or the savior of independent artists able to sell their work directly to consumers. Bowie, you've mentioned NFTs. What do you make of it?
Yeah, so NFT have definitely taken the people's imagination by storm. The ability to record and capture various forms of arts and sports and establish ownership through NFT is helping redefine the concept of ownership versus viewing pleasure for the general audience, and it has helped balance the industry slightly in favors of artists and sports persons, but there are still pros and cons, obviously, and the issues of storage of the assets that are owned through an NFT is not fully resolved. And that is something a few industry players are trying to tackle. And also NFT are technically make it very convenient to electronically launder money, as tokens in general are very easy to transfer. But then NFT for True Global Ventures. True Global Venture actually is a very early investor in the NFT space and also the blockchain. One of the portfolio companies called the Sandbox, which is a gaming platform where you can buy the virtual land, you can create games as a game developer or programmer. You can play games, you can actually interact. They have the whole ecosystem where they have players, developers, and virtual land owner, so to interact. They've been doing very successful, especially I think in 1 month they did over 6 million virtual land sales. And but I believe this is just the beginning. Last year, I think as of last December, there were 170,000 NFT wallets, I think, recorded. And as of end of March, I think it jumped to 700,000 NFT wallets on Earth. So think about these numbers of NFT wallets versus the population. I think we are just in the beginning of the stage.
Thank you, Bowie. And I do remember reading just the other day how actually NFTs has become such an interesting new source of income, especially for folks in the Philippines. Now, I do want, as we're talking about different tokens, different coins, like I left the policy, financial inclusion world at the World Bank about 3 years ago to delve quite deeply into blockchain. And at that point, the crypto market cap was around $400 billion. It sits at around 2 trillion right now. And a lot of people are seeing the Bitcoin rally, the ETH rally, the Dogecoin rally, and feeling that they're missing out on something, but lack the market knowledge to understand which tokens are worth it, what are the scams, what are not. How can people tell what's worth it and what's of value in this really wild up and coming world? Lorien?
Thanks. So I mean, we've just been talking about NFTs and DeFi, and and one of the hallmarks of crypto for the last 10 years has been all these new buzzwords that have made people excited and made people make and lose a lot of money. And this has just been the pattern. And even now, when you mention the market cap, the general market cap of all crypto, $2 trillion, that's not showing success. It's just showing the speculative mania that we are living in right now, where so many people are FOMOing and wanting to make money and seeing their friends getting rich. This is just the nature of where we are right now, and any new buzzwords that come up. And I'm very skeptical around DeFi and NFTs. This is what is always going to be hooking people. And until we start seeing regulators come down on these projects, people are going to be investing in them for the sole reason, not because they believe in the project itself, but they think that the price can go up. That's an unfortunate thing around crypto today, where the success of a project is how valuable it is. And that's why we see BTC, everybody's hyping on BTC, mainstream media, prices going up. You keep hearing people saying things that the market has decided, and that's why it's so successful. In the beginning of my presentation earlier, I talked about how a token on a blockchain is a commodity. Now that means that in the same way a commodity is in the real world, like wheat or oil or whatever it is, they have intrinsic value in the use cases that can be applied. We need to look at blockchain as exactly the same thing. If you think about the internet, the internet itself isn't valuable, but the companies that have built platforms on top of the internet, like Facebook and Google and Amazon, those companies are valuable. So these blockchains in and of themselves will never be valuable. It'll always be about what business cases or what practical applications can be used on top of these blockchains. That is where the value comes from. Now, of course, if you look at a blockchain like Bitcoin, which is a limited supply token economy, then of course, the more that those tokens get used and the more demand that there is for those tokens, then of course, supply and demand dictates that there should be a value set, and the more demand, the higher the value. So, we need to look at these blockchains and say, how useful are they? And on a whole, most of them have a lot of hyped projects going on, and we look at companies like Ethereum, blockchains like Ethereum and all the companies that support it, as imagining that they're going to be able to build an entire ecosystem of applications, decentralized applications, or whatever it is, that inevitably will make the blockchain tokens more valuable. And the question is, are they going to be able to do that? Now, most of these blockchains have problems. It's not just that you can't just look at the logo and look at the community behind it to see if it's successful. You actually have to look at the actual technology platforms that are being created. And Mike obviously knows a lot about those sorts of companies. But you have to think, that if the internet couldn't scale, would we have YouTube today? Now, people like Andreas Antonopoulos, if you listen to him, he'll talk about how, yes, a lot of these blockchains can't scale today. They can't reach massive audiences. They aren't complex and do have problems with security. But eventually, we hope that those will be ironed out. So now the question is for you, are you willing to take a punt and start, and if you want to make money on this, do you want to invest in these blockchains and have a diverse portfolio, which a lot of people recommend? Or do you want to be somebody who looks at it more carefully and decides, that yes, that this is going to succeed or not? So obviously that's complex and difficult, and not everyone can do that. Now, to me, it always comes down to the stuff that we've been talking about today, which is that regulation side of things, and also the ethos around a network or a protocol that can't change. Now, I've said to you that in Bitcoin itself, there was a lot of schisms because some parts of the community wanted to change the protocol to make add things and take away things. But that is a route that is never going to end in stability. Mike also mentioned stability. And it means that companies are never going to want to come in and build platforms on top of those protocols that change. The internet became so successful because businesses knew that protocol would not change. And so Amazon could invest in building applications on top of the internet protocol. So one of the most important things is regulation. The second is, of course, stability of a protocol. And if your blockchain is a work in progress, and you think it's all about the developers and the technologies they're building into it, that's not the case. And again, that is what eliminates 99% of blockchains out there. Also, don't think that these things like NFTs are new. I mean, tokenizing certificates, if you think about shares in companies, I mean, we've had dematerialized share certificates for many years now. So NFTs aren't anything new when it comes to ownership rights. Now, of course, NFTs nowadays don't have any link to ownership rights. They are these weird things that people trade and believe in the same way they believed and traded in things like CryptoKitties or something like that. So, again, all these ideas are not new. They have existed for a long time. Don't let people fool you into thinking that NFTs are this new era of ways of having ownership on things. Look, you can own something and you can have a certificate of that ownership, but that certificate is only going to be recognized if it's registered, if it's held by a lawyer, some kind of securities depository or something like that.
I mean,
yes.
One could argue that none of these ideas are new, but the technology is kind of catching up with what's going on, and legal, the legal framework will always have to come and look at whatever is new and then regulate it. As it's really difficult to regulate a priori, any kind of new technology. Bowie, how do you look at projects that are built on blockchain and decide that it would be worth to make part of it?
If you talk about from True Global Ventures point of view, I think there are two specific rules that we follow. One, we always choose a project that we only invest serial entrepreneurs. So the startup they run, we want to I think we feel more comfortable with the entrepreneur having exit in the past with their side, whether either they close it down or they sold it, and there has to be the second or the third venture they started. That shows they have the experience building. Second is that they have to put skin in the game, so they have to invest their own money into the startup before they talk to us. I think those are the two minimum rules that we would see. But speaking about I guess, scanning the startups, I think one of the key is, does it really make sense? Do they really have a solution to solve the problem? So instead of just for the sake of having a startup and come up some fancy name, but without really solving the real problem, would not make sense to us. So but we are always looking for good deals, so happy to be connected with everybody. If you I guess in those 4 verticals and have really good solution, really trying to solve a problem, please reach out to me.
Mike, from the perspective of somebody who's been building on several protocols, how do you make the decision of which protocol is worth learning how to build on, and how do you make that?
Yeah, not a very exciting answer. We'll, like, for example, I mentioned that Tezos and Algorand are clients of ours. Therefore, we've invested time in learning a lot about the Tezos and the Algorand protocol. There's not too much fireworks in the answer there. Obviously, in the early days when we were doing this, we invested time in understanding the Bitcoin protocol and the Ethereum protocol and different types of ERC contracts. We just to be clear, we don't sit and go, hey, what protocol should we go and learn about? That's not how our business works. We've got very strong developers. They can pick up new technologies very quickly, and we learn as and when we need to. They don't differ enormously. I think what differs is maybe the languages that are used at the core. But the truth is, and I think a lot of people need to understand this as well, is like the concept of a blockchain developer is something that irritates me a bit, because there's no such thing as blockchain developers. There are developers that utilize blockchains in their applications, and if we're building a project that is a blockchain project, the percentage of the actual work that gets done that is completely blockchain specific is very small. It's building front-end applications and applications that are interacting with blockchains. And just to be clear, we do not build blockchains. Like, for somebody to outsource that to another company would be insane. Like, if you're building a blockchain, that needs to be your core competency, where you have a room full of PhDs that are far smarter than us coming up with these incredibly difficult solutions to big problems. Just going back to your original question, which I understood was around, just correct me if I'm wrong, but I think you were asking, like, how might people make decisions what they invest in? I mean, it needs to be very understood to everybody that this is incredibly speculative. Even I'm very lucky that I have access to some of the biggest crypto names in the world, but even speaking to them, they refer to these things as experiments. They refer to Bitcoin as an experiment. They refer to DeFi as an experiment, and that's what they are. They're experiments. We haven't proven this stuff yet. So I'm very bullish on crypto. I love blockchain technology, but I'm the first person to say, like, absolutely get into it, but understand that any money you're putting in, you really and truly have to be, you've got to be prepared to lose that money. You really have to be prepared to lose it, as you would as putting it on a gambling table. And if you go in with that mindset, to be honest, and this is probably going to be an unpopular view on the thing, it is a bit of like throw it at a dartboard and see what the hype cycle is going with at that time, because you're acknowledging that you're speculating. You're not investing in business. You know what Bowie was saying about investing in business? I completely agree. That's not how you look at crypto. You don't look at, like, very few people can actually tell me who the, I mean, I'm sure Lorien can, but like, how many people actually know who the lead contributor is to Bitcoin? Like, probably no one. Lorien probably does. I don't even know who it is, right? That's not why I buy Bitcoin. So as much as this is probably an unpopular statement, it is, unfortunately, from a speculative perspective, it's absolutely a sentiment-driven market. That's crypto. Investing in the underlying businesses, that is a whole different discussion, and that's what Bobby's talking about. But that's got nothing to do with crypto. That's got to do with analyzing and doing your due diligence on a business. They're two very different things.
Thank you so much, Mike. We are at time, and so I want to ask very quickly, Mohammed, one question. Speaking of sentiment, what's your sentiment regarding where the traditional finance sector will be in terms of crypto adoption in 1 to 2 years, maybe in 30 seconds?
So 1 to 2 years, the change would be minimal, Anca. I think it will take a little longer than to reach there. But good part is banking sector is already looking at using AI very differently. So they are going into that space. And I think as they move along further, blockchain, crypto, all these will come into the part. But it'll take a little longer than 1 to 2 years. Thanks.
Thank you so much for that. Thank you everyone for their participation on the panel. Thank you so much to everyone who's connected to watch this panel. And I think we're turning it over to either a break or the main session or the lounge right now. But I think this, in any case, this panel is over without going too much over time. Thank you so much, everyone, for joining us today.
Thanks, Anca.
Have a good rest of your day.
Thank you, Anca. Thanks, everybody.
Thank you.
Thank you so much, Anca, and thank you to all the panelists. That was very interesting discussion there. We're going to take a short break now, just a 5 minutes break again, and then we do our last session. And the last session will have two, I would say, a presentation and a panel discussion. So we're going to talk about anti-money laundering, KYC, and then we're going to talk about the digital transformation strategies that you can adopt post-COVID. Thank you so much again. We see you in a bit.